I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, Mr. Nick Hodge, who's also an investor, publisher of Daily Profit Cycle, and a bunch of other neat things. This is the 305th episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets, gold, silver, uranium consolidations, Daddy Doge dollars. We're going to talk about Daddy Doge dollars. A lot going on in the world as always, Mr. Hodge. How goes you and your beautiful family, sir?
We're all doing great, Gerardo. Everybody's getting big. We are enjoying winter. We hit the Mount Spokane last weekend for some tubing and have just in general been enjoying the snow that finally came because it came late. How are you?
Doing great, doing great. Thank you for asking. Everybody's healthy, above ground. I'm up and at it, being productive, and looking forward to getting out of what is, for us here in the Austin area, a cold spell. It was feeling like 3 degrees yesterday with the wind, and that is not common. And for those of you that are going, well, if you're 3 degrees, it's winter.
It's pretty cold.
Well, next week it's gonna be 75 degrees here, so it's the swing in temperatures that I think is causing a whole lot of confusion. And you know me personally, I'd rather it be 110 than 10. So I'm hoping to get closer to that here in the next week. But no, things are great. Things are great.
I think the warm up is coming, and the resource stocks are already heating up, as it were.
Let's get right into it. They are. Gold continues to prove resilient. 29.36 fell below the 2,900 level briefly. Did not care, did not want to stay there, turned right back around. Silver broke the 33 mark for a good chunk of the trading week this week and is now just slightly below it. Though I should note that in the futures price, right, I'm quoting the spot price here. The futures, it's well above that 33 handle. Copper sitting tight right around the 426, 427 mark. Again, the copper futures are robust as well. All this while the dollar had a nearly a 1% drop today, down 0.77%. I'm talking about the US dollar index at 106.35. And I want to start there. I am usually not the person that cares about Walmart earnings or Amazon earnings or Apple earnings. I watch them as an anecdote, and I watch them and I listen to conference calls sometimes, or at least get the Cliff Notes version just to see if I could pick some things out. Because Walmart is so reflective of the majority consumer in the United States today, right? It's definitely not catering to the luxury consumer. So when I see Walmart miss by quite a bit and lead that profit growth will slow, and then I look at people that are much smarter than I, people like Danielle DiMartino Booth, who keep citing mortgage delinquencies reaching new highs, auto car payments reaching new highs as far as the loan delinquencies goes, mortgage delinquencies, as I mentioned, and I could go on, credit card debt hitting, credit card usage hitting, multi-decade highs. If growth is going to slow in the overall economy and Americans are already tapped out, I see why Donald Trump and Elon Musk now all of a sudden want to take 20% of their supposed fraud findings, right? The waste that they've uncovered. And then we could have a separate conversation one day, not today, but about whether or not it's real fraud or just stuff they don't like, which are two separate things. But let's just say it's all fraud. They're saving us money, which I love. I'm a small government guy. I'd rather have less cops, less FBI agents, less IRS agents, less everything, and let's be a whole lot more efficient because I think there is a lot of waste. With that being said, if we're going to have an economy where the average American is pinched, stretched out in regards to credit card debt, missing car payments, kind of behind on the mortgage payment, that's very deflationary. I see why Donald Trump and Elon Musk want to send everybody $5,000, which is the equivalent of 20% of what they said they've uncovered in fraud. But then I go down the rabbit hole and I start looking and I go, well, okay, $5,000. We've seen this before. Because he did it in this first administration. He sent everybody, he wanted his name on the check and sent everybody a check. People forget about that, right? And I look at that and I go, what they're afraid of is deflation. And what they're going to do, they're going to cause another inflationary bubble because simultaneously, Fed governors are coming out and saying, we might pause the tightening cycle now, right? Meaning we might actually put a hold on the tightening we were doing in the bond market. And that is a setup. That is a volleyball spike setup for, in a little bit, we're probably going to go back in and do some QE, which I said kind of was going to be the next thing that they're going to start rolling out. So if we're going to do QE and we're going to start sending people $5,000 checks, but growth is going to slow down. I know my history a little bit. It sounds like the 70s to me. It sounds like stagflation. Stagflation is good for hard assets like gold. Stagflation is not good for most Americans, folks. I mean, unless you're in the rich 1%, and can take advantage of credit and access to capital and asset prices falling on homes and autos and commercial buildings and things of the likes, then this isn't really beneficiary for you all. If we're then going to, and I'm sorry for the rant, if we're going to compound that with an immigration policy that is strict and harsh and on some measures, according to the way they say they're going to roll it out, look, that means a lot of cheap labor is going away. So you can't have it both ways. I don't feel the warm and fuzzies about the economy overall. And I think in a year from now, we're going to be looking back and going, yeah, we kind of saw the QE happening and the printing of the press running again. And I think we're going to be out to the races on inflation again, but it's not going to be right away. They're going to let people feel a little pain. So Mr. Trump and Elon can take the victory lap and say, we felt your pain, but now we're coming to the rescue again. We have to do this and we're going to get this done because that's the way they operate, right?
Yeah, you think about it, I think, a little bit more deeply than I do in terms of what they're going to do. What I see is inflation returning, and I see them obviously worried about how they're going to finance these debts going forward. I was saying going forward last week, I was saying I was confused, right? I think it depends on your time frame, right? Because they obviously want to get inflation down. They obviously want robust growth. But in what time frame are they going to get it? Like Bessent was just making the rounds on TV this week, or maybe even today, talking about,
Yep.
the different durations of securities the Treasury was going to sell to finance the government, essentially continuing the policy of Janet Yellen, who he criticized before he took office. It's really more of the same, right? And that's what I talk about when I talk about the both sides ism. Like, the debts are too big, and the momentum is such that, yeah, trot your Doge out there, right? But you're still in a backing yourself into a corner, and have been backing yourself into a corner. Let me say that, because that's what the government has been doing for a long time.
Yep.
And you spoke about the consumer and stagflation. Gosh, I remember 10 years ago writing articles about how the American consumer couldn't come up with $1,000 in an emergency, some percentage of them. And that's still the case today. The American consumer, the bottom half, however you want to phrase that, hasn't gotten any better. And we all know that one of the main reasons why is the separation of the haves and the have-nots, which is maintained by the things that we're talking about: monetary policy, the Fed, etc. So as far as, are we going to get stagflation, that sort of stuff? I'm not sure. Like I've been saying, the economy looks okay in terms of just GDP, right? Like, not setting the world on fire, not 4, 5, 6%, but, certainly 2, 3%. I think we're just still in that whipsaw period, right? You said a lot of things there about policy and people feeling the pinch and treasury yields. But I really haven't seen a lot of decisive action yet. I've going back to Mr. Bessent on TV. Oh, it's policy dependent. We got to wait and see what path the market wants. We got to see what the market wants in terms of what types of securities we're going to sell from the Treasury. And that to me just looks like, again, a Fed that's backed into a corner with its debt loads, right? And so I don't know. I don't know if I said a lot there, but I continue to be a little bit confused. I think the market, maybe confused isn't the right word, because we've seen new highs in the S&P since you and I last spoke on this podcast in the past week. Gold, though, sees something, right? Because gold goes to new all-time highs, which you said, and the dollar's starting to roll over as well. So those are the two pretty big things.
Yeah, and it's the dollar to me that's telling, right? The dollar to me is telling me that it thinks, inflation comes back sooner rather than later, and that the Fed policy shift will happen sooner rather than later. I think you made an excellent point. And Mr. Bessent coming in and parroting exactly what Janet Yellen was saying before. And when we talk about, a new administration, new way of doing things, yeah, we're seeing it on some fronts policy-wise. But economically and financially, we're seeing a lot of the same. We're seeing a continuation so far, at the very least, in this first month of the other policy. And so it'll be interesting to see where it goes. What I do know is this: structural deficits in the copper space in 2025 are going to really, really start showing up in a very material way. I think the copper price is starting to sniff that out. We've talked about that before. For those of you that are listening to this, and are wondering how to position or want to position, but you don't want to take the risk of, one of my higher risk, higher reward copper plays, or one of Nick's plays. And Nick deals with a lot more higher quality, more liquid, more established names, right? I tend to lean a lot towards the explorers that are looking to discover something. For me, the risk is worth the reward. And my job at the end of the day is to try to mitigate that risk for myself and the people that follow my stuff. Nick does a great job of that as well. However, Nick also dabbles on, the space where there's more liquidity, the Freeport McMorans, the techs of the world, the companies that if you buy and you have to sell, you can find a bid, right? You're not going to get stuck with a 3-cent company that nobody wants to buy with those types of recommendations. I say all that to say, folks, pick the way you want to make money in this copper cycle, because those deficits are very real. There's nothing coming online that's going to prevent those. And it's going to last for years. For years. I had a conversation with one of the smartest people in our business, Dr. Nikki Atsiad Bell, and she was explaining basically the same thing. We're in unison when it comes to that. We agree completely that the copper deficit is structural, meaning you aren't going to band-aid it and fix it and make it go away. It's going to be years and years and years of this, and you're going to see much higher copper prices. So I say all that to say, y'all better have your copper positions topped off, because they're going to start really taking off on you in a very material way soon, people.
Yeah, I think commodities across the board are starting to rise. If you look at the CRB index, we were talking about the PGMs a couple of weeks ago here, platinum and palladium. Those have started to perk up here a little bit. And there's always multiple ways to skin a cat. And it depends on, like you sort of just talked about, your risk level and also how much work you want to do. So, yeah, I do the Freeports and ETFs a lot with my retirement capital in IRAs, and by all means write checks into smaller companies, and that's really the bread and butter of what we do here. So yeah, I do some macro and I look at charts, but that's quote unquote easier, right? Because if copper's going up, you buy a basket of copper stocks that go up, right? Or if commodity prices
Weez
are
is
going
smart,
up.
yay!
Exactly right. But the smaller end of the spectrum is much harder, right? You have to have fewer positions. You have to have a deeper network. It's not about just throwing darts at the wall. And that's what we specialize in more, especially on the private placement side of things, me and you, and then you just on the in the open market buying with Junior Resource Monthly. So anyway, inflation is going back up. I think people are going to be temporarily confused because for the past couple of weeks, and even maybe for the start of the year, let's say for the past month and a half or a month and 3 weeks, oil was going up and then oil started going down. And that's one of the big inputs to the CPI. And so I think you could see some volatility in the CPI number itself. But that aside, take out oil, like all the other things, maybe not all, but most of the other things are going up. Again, back to the softs. We've talked about that. Everybody's talking about eggs now. Coffee's up. Restaurants have egg surcharges. It's coming back into the hard commodities with copper and PGMs, like I just said. So, and the deal space is heating up as well. Like the companies have started to move. So, anyway, I'm not sure where you wanted to go with that, but there's plenty to talk about. One thing I was going to mention here at the top, just looking at our list, because we've gotten away from it, is that there's not much that isn't bullish, right? Like the S and I was going to make a list of what to talk about, and I said we might as well talk about what isn't bullish. Like the dollar's not bullish. We just mentioned that. The VIX is not bullish. We haven't mentioned that yet because the S&P has been hitting new all-time highs. I know as we record this today on February 20th, it was a pretty big down day in the market, but nonetheless, it's hitting multiple record highs in the past week. And so, we'll see. You mentioned Walmart, but nonetheless, the Walmart stock has been performing really well.
Sure.
Multiple sectors of the S&P are performing well. And so, anyway, where do you want to go from here?
No, I think one point, even the stuff that's not bullish right now is bullish, right? Uranium. uranium isn't tremendously bullish right now. If you look at the spot price and you look at the equities, especially the equities that I love, the, market caps of 15 million, 20 million, 50 million, on the lower end of things, it doesn't look bullish. A lot of people are frustrated with the consolidation and why the spot price won't go up. But then I look at the supply demand fundamentals, and again, I'm looking at it and going, it's a heck of an opportunity. If you want to sell me, a premium bag for my wife or a premium tuxedo for myself, and you're willing to give it to me at a substantial discount, I'll buy it from you. If you want to sell me something that I know is going to, over time, retain and even gain in value, a Rolex timepiece, for example, if you want to sell it to me for half off because you're bored and just need the capital and want to go spend money on one of Dave Portnoy's meme coins, by all means, I'll take it off your wrist at a 50% discount. That's how I feel with a lot of these uranium equities, especially the ones that are near production, that have production facilities that are permitted, and they're just waiting for that $90, $100 price to kind of light back up on a consistent basis before cranking up the production. Those are on sale. Those are being given away right now. And so, I would encourage everybody, even the stuff that's not bullish, it's bullish. It's just not bullish right now. And it's kind of the world that we're in right now, especially in the resource space,
Uranium's been interesting to watch, especially the, quote unquote retail crowd and the Twitter crowd. I mean, they're throwing in the towel once again. The sentiment is gone. The uranium trade is dead. They're wondering if they should get out or just not look for a while. I mean, all the nothing's changed with the fundamentals, right? I get that the price of uranium is pulled back to 65. It could even go to 63, 62. That's all fine and well, man. Like all the fundamentals continue to be the same, if not get better. Like Japan recommitted to nuclear just this week. Like all the announcements continue to be what you would want as a uranium bull, right? And so I look at the equities too, and I won't tell you names here, but I've told you in recent episodes that we were buying back into some of those producers and near-term producers, like you say, and you're getting an opportunity to do that now. Again, it comes back to time frame and duration. If you're willing to hold these things for a bit, then right now is a pretty darn good entry point for some of these uranium names, I feel like.
Hey, I want to read something really quick in regards to gold, because I touched on it last week about Chinese insurance companies being allowed to now dabble in the gold market. The Chinese culture is very, very fond of gold as a wealth preserver, right? Have been historically for a very, very long time. Gold is culturally ingrained. And so, and I'm going to butcher the last name just like everybody butchers my name. No excuse for that, but it just is what it is. Kevin Bambrow, or Kevin Bambrew, at Bambrew Kevin is the Twitter handle. So all credit to him on this. But he says Chinese insurance companies could end up buying 8 to 10% of global supply of gold per year. These 300 tons estimated boost would have, this 300-ton estimated boost would have China purchasing more than half of the world's gold per year. And so he goes on, and it's an excellent post about tariffs and how tariffs are just going to drive the price of everything in the United States up.
Oh.
And how the person that's least affected will actually, in a tit-for-tat tariff war, is China, because when it comes to labor, it's 7 times more expensive for Chinese people to pay U.S. citizens to make stuff for them to make it for themselves, right? And so it was a really, really well done post. It talks about treasury holdings that China has, the leverage there. But, the key point to me was tariffs are bad for everyone, but they're really bad to the economies that can't produce cheaply. And they're really bad relative to companies, is funny, Freudian slip, countries that are able to produce cheaply, that have cheap labor and have access to it, and also have the consumer base to not only produce within its own borders, but also consume within its own borders. That kind of negates a lot of the effect that these tariffs are intended to have. And China, again, a lot of these tariffs are coming from China on critical metals, and we're sending them right back. But it was a really well thought out post and worth highlighting here for the purpose of this podcast.
Nice. Yeah, I was just going to say, where your metal's going to come from. I think you're going to start searching for, non-Chinese places to get your metals from, and that plays into our hands and then some of the companies we dabble with. But What else you want to talk about? You said
I,
something there about
I
premium
wa-
bags.
yeah, no. I want to make an offer really quick before I lose my train of thought, as I often do. But we talked a bit off air, and we had a couple of people approach us this week about our mini products. And so there are people out there that dabble in crypto, dabble in tech, and also dabble in the resource stocks that I make my living off of, and the stocks that Nick makes his living off of. And so the inquiry came in about whether they basically said, we would love to commit to all your products and we would like to buy all the services. If I asked for a bundle deal, would you give me a bundle deal? And, Jimmy, who was our customer service wizard, was kind enough to customize a package for him and tell him, which ones do you want? And gave him a pretty competitive discount on some of those services. So if you're like the couple of gentlemen this week that reached out about maybe, getting 4 or 5 of the services and then taking them in, call in. We'll work with you on that. And definitely, I mean, at the end of the day, our bread and butter really is our investing, right? Like that's where the bulk of our revenue comes from. The companies that we own are profitable and we enjoy doing that, but we really have a passion for trying to educate and provide platforms and opportunity to educate with what we're doing with our capital and the trends that we're seeing, and hopefully people can capitalize off of that. And so, yeah, if somebody reaches out and they really want 4 or 5 products, reach out to us. We'll give you a deal on some stuff. And last but not least, I'll say that private placement service that we have a deal active right now. And I was having a conversation with a subscriber yesterday, and he asked, well, what's the upside? And I told him, this has got an easy 10 bagger written all over it. Like easy 10 bagger written all over it. Will the geology have to work? Absolutely. Do we already have a couple of holes and indications that the geology will work? Absolutely, right? We already have 2 great holes. This is already a discovery in the making, but it's been made. But it's early. It's one of the better structured deals that I've seen. Nick and a close advisor to us brought it to my attention. I looked over the deal. It's one of the better ones that I've seen in quite some time. And I think that speaks to the quality of the deal flow this year. We've seen some really good deals come across our desk, and it's not always that way, folks. Sometimes it's just companies chasing the next trend, and then that trend goes away and then it gets reworked. And we still see a little bit of that. That still happens. But the quality of the deals that are coming in right now are really, really good. So if you're an accredited investor, that service alone will pay for itself probably just with this deal.
I'm going to talk for a little bit. So, yes, by all means, give us a call, 844-334-4700. That's Jimmy Mengel, our director of member services. And yes,
he's a wizard, Nick. He's a wizard.
That's funny. We've been selling bundles this year. We've standardized our pricing on across all our products, and we're starting to offer bundles both for our monthly letters and for our higher price, more speculative letters. So give him a call, and he'll answer any questions or walk you through that. He has rapport with a lot of the readers, is one of the things I was going to say. Like you mentioned, a gentleman who just subscribed to all of our services for life today. I was talking with Jimmy about that, and he says, oh, that's whoever, Terry. I've been talking, he's been a great customer for years. I've been talking to him. Like he knows who it is, right? And you were talking about premium handbags a second ago, or watches, right? And buying those at a discount. So let me see if I can tie this all together. The highest price point we offer, the highest tier of service we offer, is private placement intel. That's where we're directly investing in these companies via private placement. And you have to be an accredited investor to participate in those deals, right? So these are often high net worth folks that are on the list. You and I are often writing checks into these lists, into these deals.
Yep.
We're not foreign to the finer things in life by nature of, being accredited investors and the circles we run in, et cetera. So people should understand that analogy when, one, striving for the best, which whether that's a Versace handbag or whatever it is, or a Rolex watch, or, the VIP experience at Disney that we're going to take our kids on this summer, whatever that is, right? That's what you should be striving for. And there's tiers of service that allow you to get to those things or keep you in that, premium tier of life, right? And so for us, that's private placement intel, which is typically $5,000 a year, and we're offering it at that discount that you said, right? So for 2025, at least for right now, we're offering it for $2,025 the first year of access. And that's the service that we just had the webinar about. That's the service that
Yep.
we delivered, or you delivered, over 11,000% on with Patriot Battery Metals, and a slew of other deals that we talked about in that webinar. New one that's opening up now, and we're guaranteeing one of them is going to double inside of the next year. So give Jimmy a call and ask about that as well. He'll walk you through our track record, tell you about private placements, answer anything you want to get answered. That was the last thing I was going to say. The reason I did tie it all together full circle. Look at me go. The reason that gentleman decided to become a lifetime member of all the services was the response to his questions and the service that he was getting. So he was trying to participate in this private placement deal that we have out there now. He was having trouble getting in contact with the company, and we took care of it today. Like, Jimmy hit me up, and I hit up the company, got his issue ironed out, and the gentleman decided to subscribe for life. So whether it's our other services or whether it's our private placement service, give Jimmy a call or check them out on Digest Publishing. You thought something was funny. What was it?
My dumb scattered brain. I just think it's hilarious that, Nick is younger, right? But he's not younger by like a whole heck of a lot. I think I probably got, like 6 years on you, right?
Something like that.
But because I started having kids at such a young age, we're in different stages of our life.
Oh,
so
yeah.
when you said VIP experience I thought you were going strip club. So when you said Disneyland, I was like, oh, nope. He
No,
wasn't
man.
talking about Perfect 10. He was talking about Disneyland. So no. Well done, sir. I thought it was funny that my brain went there and your brain went that way. Good work.
I mean, once upon a time, and maybe once upon a time in the future, but right now we've got three in elementary school, and so they get the bulk of the spoils right now.
I hear you. No, look, I think that's a great place to kind of segue into the next thing, right? Our job is to mitigate risk when it comes to our services and to maximize the upside, but you got to do the mitigate risk part. And somewhere where it's really hard to mitigate risk is sports betting. And I know that we've touched on it briefly in the past. We've talked about how I've mentioned that I think sports betting is going to be the next really bad epidemic here in the United States, especially amongst men, right? It just doesn't seem like the healthiest of ways to allocate capital in hopes of a big payday. And look, I have family members that I've said, look, if you ever need some help or you need, some guidance on the stock stuff, I'm happy to look at stuff for you. And they'll respond that it's risky and they're just not comfortable with risk. I'm never one to obviously, tell them like, no, you should be doing this. Completely respect everybody's risk tolerance. So, naturally I just back off and then, then days later I hear that, they've spent the last year and a half, on whatever. I don't bet. I'm not a gambling person. On whatever sites betting. And I'm like, well, how are you doing? And, they'll show me and I'm going, you're down like $25,000 in the last year and a half. Like, you know what you can do in my world with $25,000 over a couple of year time frame with the right deal? Because you've seen it many times over, right? And so I don't know. There's a disconnect. And then I go back to the original reason why just stocks weren't, within their risk tolerance. And I'm going, but this is, those are that's why I say I could see this really becoming, and it's lots of people, it's friends, it's family members. I did this isn't a one-off. I think sports betting is going to become a major pandemic here in the US, man. I think it's going to be bad.
Yeah, so I obviously put that on the list. I really didn't know what I wanted to say. It's a theme we've talked about a lot on this podcast.
Yeah.
Maybe not a lot, but we have some themes that get weaved in and out over time. And we've talked about sports betting a lot. I'm not a bettor either. Like, I've never made an account on one of those apps. I can't even think of the name of them right now. FanDuel, and there was another one for a while. And now I read a lot about Flutter because it's a stock that you can buy. But I've never bet, on a game outside of doing some March Madness polls or a Super Bowl poll here and there. But you're right. It's evolved into, I don't know if epidemic is the right word, but it's immensely popular right now. And I don't really understand it either. So I was going to ask you if you dabbled at all, but you already said you don't. So,
No, sir.
um,
Not one. I've never done it. Ever,
but
ever, ever, ever. Never will.
no, right. So, and I know a lot of people that do as well, have family members that do, and friends that do. And I always just thought maybe I'm not into sports as much as they are, but I enjoy watching sports, different sports, live sports, all kind of sports. I just never had the urge to bet on them because I don't have an edge, right? Maybe you bet on the games that are slam dunks, right? Where there's the odds are heavily in your favor, but some of the stuff gets crazy, like the parlays of you needing two things to happen, and just a couple of other things I wanted to talk about, I guess. Um, One, you can bet on individual things, individual players now, right? Their individual performance, what they're going to do in a game, what may or may not happen. You may recall in the Super Bowl, they were betting on the color of the Gatorade. There was all sorts of side
Yeah,
bets
that's
and
wild to me,
stuff
man.
going on, right? So there's that whole aspect of it. And, amateur athlete associations are getting concerned. I was reading, I guess I've just seen a bunch of stories about this. That's why I put it on the sheet, because if you can, they're worried about individual athletes taking bribes, et cetera, to throw their performance. If you can bet on individual performance inside of games and stuff like that. So it's getting crazy. And then I know you like boxing, and
Love boxing.
we've seen just different formats, right? Like the Tyson fight was huge last year on Netflix, and there was a ton of betting surrounding that.
Yeah.
And other sports have gained popularity and in turn equities. So that's really where my interest lies. Like I read this all through the lens of stock research because Formula One got really popular in recent time, and that's a stock you can buy on the pink sheets. And then a company called TKO was doing essentially the WWE stuff, right? And that stock has done phenomenal over the past year, and people are betting on that. And then you'll know more about this than me because somebody was asking me the other day, have I seen Dana White's league where people just slap each other? Have you seen that?
Yeah, I've seen it. I haven't watched any like live, but I have seen it.
Got it. Okay. And then I saw this one in Romania the other day where it's like 10-on-2 or 8-on-2, like two professional fighters against 8 guys who just want to go in there and see how long they can hang. So I don't think there's a huge audience to watch this stuff. I think it's under these new leagues are being created for new things to bet on, right?
Yeah.
So it's a really huge
Like
market.
derivatives.
Exactly right. So yeah, anyway, yeah, that's what I just thought it was interesting that all that stuff is happening. And you already mentioned Dave Portnoy. He's obviously huge into this, has made a ton of money with the Barstool thing, et cetera, et cetera. So I don't know if there's anything else I had to say about sports betting, but I just think it's interesting, and I like watching it all play out.
Tread carefully, people. Here's some quick numbers that I pulled up, courtesy of KTLA. A study found that betting on sports has gone from $4.9 billion in 2017. It went from $4.9 billion to $121 billion in 2023.
20x, yeah.
That's in 2 years. We're now in 2025. I'm curious to see what the numbers are now. That is a huge increase in actual capital being allocated to sporting events. That's nuts to me. It's bonkers to me, right? But hey, I wish everybody all the luck. It's like everything else, right? I wish everyone all the luck. Just be careful out there, folks. Careful out there. And yeah, go ahead. No. That's all I was going to say. Just, yeah.
Not related to sports betting, but bets. And this sort of goes back to the geopolitical stuff. But you saw the hockey fights, I'm sure, right?
Yeah.
So, and I didn't know a lot about this either. But, the NHL does this thing now where they have their 4 countries face off. And the U.S. and Canada were fighting each other. So I'm sure there were hockey bets being placed, of course. But I thought it was interesting that these folks wanted to just come gloves off right at the opening, whatever, puck drop, or I'm not a hockey guy, so I don't know the terminology, but who should typically otherwise be friendly, like play in the same leagues together. So you can just sort of see this overarching thing of how, the political mouthpieces translate all the way down to the ice, the hockey ice, right? Where we're trading lobs back and forth about tariffs and becoming the 51st state. And all of a sudden we're like boxing because they're booing our national anthem or whatever. I was thinking to myself, like, wait, what the fuck? Like
2025 is a trip,
mass
man.
psychology is a hell of a thing, man. It's very interesting. Yeah.
Yeah, Mr. Dines, the great Mr. Dines, right? But we definitely was on to something. Mass psychology is a real Real thing. I think that's good for the non-premium portion. I know we have a lot of questions on the premium side of the podcast and quite a few stocks to go through updates that we received requests from earlier in the week. So listen, I hope everybody has a great week out there. I hope have it's going to be a great close to the month and a really exciting March. I am Gerardo Del Real along with my partner, Mr. Nick Hodge. This was the 305th episode of our weekly therapy session that we call Investing in Bizarro World. Take care of yourselves and take care of each other out there, folks. Send us off, Nick.
Keep the questions coming, and we'll see you next week. Adios.